Now today, the question we would like to highlight in this ALDE seminar is, are these steps announced or already proposed by the European Commission sufficient to tackle the problem, or where is the problem really? Still, there are some commentators who say it was all legal and we need a tax competition. So one of the experts we met when we met the Parliament of Belgium frankly confessed that smaller member states rely on tax competition because otherwise they could not match the budgetary necessities. So do we really need tax competition? As you can imagine, as a liberal group, the ALDE group is not against tax competition, but the question is, what is the right framework for tax competition? We are in favor of a fair tax competition, but we have the feeling that with all the revelations brought to daylight, for instance, the Amazon case, the Starbucks case, the McDonald's case, now the Fiat investigations, but all the other firms like Deutsche Bank, Commerzbank and others who are under scrutiny now, there seem to be some hints that multinational offshore corporations, enterprises, use loopholes in the tax system to deduct their tax burden, and that there could really be an effect on the competition situation. So we have, for instance, the estimates of Professor Fust, who claims that small and medium-sized enterprises have a disadvantage in competition up to 20–25% compared to international acting multinational enterprises. Others doubt these questions, but there is evidence, and from that point of view, the European Commission, the Competition Commissioner Vestager, started the state aid investigations into some of the companies. So many things on the table which have to be discussed today, and I'm honored to introduce to you today the distinguished experts we invited to our seminar. To my left side, I would like to welcome Dr. Achim Doerfer. He will give us the keynote speech. Dr. Doerfer is attorney in the field of taxation, and he is the well-known author of the book Die Steuervermeider, The Tax Avoiders. You are also a legal philosopher. Mr. Doerfer will be followed by Olivier Boutellis-Taft. He is CEO of the Federation of European Accountants, and you have already been invited to the special committee like Dr. Doerfer as well. The first time here in this context, but also well known in the community, is Markus Mainzer, a senior researcher at Tax Justice Network. Tax Justice Network is an independent international network of experts, and Tax Justice Network launched in 2003. It was launched focusing on international tax issues. Mr. Mainzer is also author of the book Steueroase Deutschland, that would means Tax Haven Germany. The book will be published in mid-September 2015. Now, welcome everybody to this seminar, and I give way to Mr. Doerfer. Mr. Doerfer, welcome. The floor is yours.
Thank you, Mr. Theurer, for the very kind introduction. Dear ladies and gentlemen, first of all, I would like to say thank you for the kind invitation and for the honor of being able to speak today before you. The subject at stake is on the agenda for good reasons. Like in a Kafkaesque architecture, behind every door there open 5 new doors. Each question that seems to have been answered leads to 5 new questions. It is for very good reasons that politics on a national level, as well as on the European one, is increasingly taking care of the matter. When my book that was just mentioned appeared last year, one day before the start of the judiciary's proceedings against Uli Hoeneß, a well-known figure in Germany, neither my publisher nor I would have expected the book would still be selling still quite well more than 1 year later. The citizens are still moved by the subject. As of my personal experience, there still is a continuing interest in the media, as well as a constant or even increasing number of invitations for speeches or readings. In my experience from many public face-to-face discussions, people are better informed in 2015 than they were back in 2014. Back then, general knowledge was limited to the details of a number of spectacular cases involving celebrities. Nowadays, there's in many cases even no need anymore of explaining the complex constructs being used by global players. I would even say that there has been building sufficient momentum to give the subject under discussion an importance that might qualify it as apt for discussion in electoral campaigns. Citizens are under the impression that the existing structures might not be able anymore to guarantee for justice in taxation. They expect new answers from politics. The fact that the whole subject did not end up as a non-starter is to a large extent owed to a number of whistleblowers. We should not forget that. They might not always have been acting solely out of altruistic motives, but without any exception, each of them sacrificed his secure civil existence for tax justice. There's been a US-American study about the question which medical doctors are the most likely to be sued by patients. The result was not that the least qualified were the most likely to be sued, but the least friendly. To sum it up, people don't sue nice doctors. For decades now, banks as well as accounting firms, countries like Switzerland as well as Luxembourg, did have one thing in common. They could rely on the acquired look and feel of respectability. Even today, to give just one example, the German judiciary might go after the single tax evader, but not after those who sold him all those expensive turnkey solutions. Tax advisors, public accountants, attorneys, bank managers. If it wasn't for the surely sympathetic Mr. Juncker, who has had the top responsibility in politics in Luxembourg during the heydays of tax rulings, but for some Luxembourgeois Monsieur Varoufakis, the latter would long have been forced out of politics. After all, this leap of faith is withering away. We still hear the argument that corporations are, in the best interest of the shareholders, forced to use each and every even semi-legal loophole in taxation. This is not very convincing anymore. I presume that the latest move of Amazon, the announcement to have their profits generated in Germany, being taxed in Germany, is at least to some extent owed to a closer look at the value of, for example, Deutsche Bank stocks devastated by a string of scandals. But we must not be content with that latest move by Amazon. Amazon is talking about the taxation of profits, at the same time seemingly still clinging to all those methods to artificially lower those profits, especially by the instrument of the IP box. I'm not convinced. As long as there are still some global players out there who move the profits away from the business operations as such and transfer them to some captive licensing corporation, we're still far away from any such thing as a level playing field. Take, for example, the services I provide as a lawyer. More or less, a commodity. What makes a lawyer stand out from his colleagues in a number is just a number of specializations or other special skills attached to his or her name. What should keep me from transferring the name of my law firm to some Maltese IP box, which in turn charges a licensing fee of some 20%, thus lowering my German tax burden considerably, while the profits from the licensing agreement in Malta would just be subject to taxation of 0%. Why not then? Probably because my local tax authority won't show the slightest sign of understanding or respect for this stroke of genius. But why then are Amazon or Starbucks treated differently? So the bigger compliance in taxation of some global players, as well as single successes in stopping tax evasion or certain banking practices, should not make us forget that a number of basic principles of justice in taxation are still to be defended and enforced. One, there has to be a connection between the level of taxation and the financial strength of the subject to be taxed, regardless of the fact if it is under the regime of a flat tax or progressive taxation. But for example, Mr. Theurer just mentioned it, for the SMEs in Germany, it still holds true that they are generally unable to artificially lower their profits, thus being subject to taxation in terms of the real operative profits to a far bigger extent than global players. As for natural persons, it has to be said that the middle tier of society, as well as the normally rich, so to speak, people, do pay relatively or even absolutely higher taxes than the very rich people. Everybody knows it has to be that way. That is the only explanation why it is economically reasonable to invest in very expensive concepts and structures of tax avoidance or tax evasion. At least there is hope that some of these measures already realized, our measures already realized or planned, have or will increase the threshold of economically reasonable tax avoidance or tax evasion. I would presume that the fight against tax evasion cannot be won on the basis of repressive governmental measures alone. We do need to strengthen voluntary compliance too. One example would be to have a larger share of the taxation be done on the local level, like this is done in Switzerland. Another example for taxation on the local level I recently learned just last week was the local residence tax in Israel, which not only pays for garbage collection services, but also for infrastructure investments such as football stadiums. So there's a higher acceptance because people really can vote on what their taxes are used for on a local level. Finally, I would like to emphasize that it might be of paramount importance that the citizens as a whole are behind the body of measures to be taken. Taxation is not just another thing, but maybe the most permanent and pervasive interface between citizen and state. We should make very clear that the fight against tax evasion and aggressive tax avoidance does not just only serve the purpose of increasing public revenues, but will considerably alleviate the burden of those who cannot or who do not want to avoid or evade taxes. Thank you very much for your attention.
Yeah, thank you very much, Mr. Doerfer, for this keynote introduction. You raised a lot of questions, not only sticking to the analysis, but already to give some ideas on how we could tackle all these questions. So the TAXE committee just visited Bern in Switzerland, and we learned there that there is a huge tax competition between the cantons, but we also learned that there is necessary a common legal framework on the federal level to secure that. So if we go into how a tax competition should be organized, we will have to define some necessities or preconditions which must be matched. I don't want to go into that detail, but give right away the floor to Olivier Bouteille-Staft, the CEO of the Federation of European Accountants. The floor is yours.
Thank you very much, Chairman, and thank you for inviting me. I think your seminar is raising a very important question. I'm just afraid I don't have the answer, actually, to the question you're raising. And the reason why I don't have the answer is that I think there is no easy answer in reality. So what I would like to do is try to make 5 suggestions on how we could go about the issue rather than providing you with a magic bullet. And I think the 5 things we should consider doing are: 1, clarify the problems and stop making it worse, because I think there are many different problems we're talking about. 2, I think we should take a holistic approach and get the broader context right. 3, we should simplify legislation as a matter of priority. 4, we should enhance transparency. And 5, we should ensure a level playing field. So let me explain with a little bit more details on what I mean by this. Well, as you've said, Chair, in opening this seminar, we don't have a new problem, I think. What is new is that we finally seem decided to address the problem. Therefore, I guess the first thing we should do is apply the traditional principle of first do no harm. Thank you. To paraphrase Einstein, I think we're currently using exactly the same kind of thinking that we used when we created the problem, i.e. we accumulate quick fixes and deadly combinations of incentives and disincentives. Tax law is very often contradicting itself. We reuse, in today's world, concepts that date back from the industrial age, if not before that. We look for scapegoats, which we always enjoy doing, instead of joining forces and cooperate together, because I believe that's the only way in which we can really solve the issues. And we keep on going for incremental small twists rather than taking a holistic rethink. Now, the problem we're talking about is mostly around corporate tax and multinationals. I mentioned scapegoating. The reality is that this is only part of the problem. There are many other taxpayers, and corporations do pay many other taxes. We're also very often confusing issues and terminology like evasion and avoidance, which are both in the title of the seminar, but are 2 pretty different things. One being legal avoidance, and the second one, evasion, being illegal. So by doing this confusion, I think we're making things even less clear than they already are. And if we have a problem with this concept, well, I think it means that it is time to redefine the social consensus on what is right and what is wrong. My second point would be to take a holistic approach. The debate on tax fairness, I believe, is part of a broader equation, and it will not be solved in isolation. There is little point in reality in discussing tax fairness, whatever that means, and I think there are very different views on that, in a very unfair world. There was a report released by the OECD last year which shows that inequality is increasing and that this increase of inequality is hurting not only society, but also economic growth. Tax, once it's collected, is a resource, and this resource has to be spent. We cannot, I think, on the one hand, repair our tax system, and on the other hand, not strive to improve public management and public finance. And I'm afraid this is much needed. And the examples that you gave at local level, I think, are a very good sign of that. The reality is that governments continue accumulating debts on our children's head and remain adverse to basic accounting best practices in the public sector. I believe that if they continue doing that, well, they will lack the credibility to fix the tax system. Most of the talking on solutions is currently focused on more regulation, But a large part of the issue is linked to behavioral change. There is a big cultural and generational side to this. We should raise awareness and standards, I fully agree, but I don't think it's helpful to judge yesterday's practices in the light of today's value. If you allow me maybe a small personal anecdote on that, when I studied tax law, I did that in a country and a university that actually prides itself for always taking the moral high grounds on these issues and on many others. And one of my professors was actually a very honest and decent man, and he was also the tax director of a very large state-owned company. Well, during the lessons, the only thing he was talking about was tax avoidance. You know. Now, my third point, I think, is probably the most important. We should simplify legislation. What is simple is easier to apply. It limits loopholes and unintended consequences. Moreover, it's easier to control. It makes the borderline between what is acceptable and what is not clearer. On the other hand, what is complex, I think, creates more cost as well as an additional layer of unfairness, as only those who can afford sophisticated advice will benefit from this complexity. However, things are not black and white. And I had another professor actually who was explaining that when it comes to taxation, you have a trade-off between simplicity on the one hand and fairness on the other hand. What is simple, for instance, like a poll tax, can be seen as socially very unfair. Tax administrations on a daily basis are often key drivers of complexity, and I think they need to be told and kept under control. Perhaps we could develop a tax simplicity index to benchmark the member states, and I think the work that the World Bank and PwC are doing with their study, Paying Taxes, is very important in this respect. It gives a much broader picture of reality. As any other areas of law, tax must enter the era of better regulation. And once tax law is voted, it should be stable. Constant change is part of the problem and is economically inefficient. Action is needed at European level too. After 15 years in slow motion, the CCCTB needs to move on a fast track. It must be restarted, simplified and implemented, and it should help us deal with some of the issues we're facing. The fourth point I mentioned is enhanced transparency. Tax transparency is the buzzword of the day, but you will notice that it is only my fourth point because I believe it will be of little help if significant simplification doesn't come first. The debate on tax transparency is, however, welcomed, but we should not limit it to transparency of tax payments. It should also cover government's activities like rulings and more. Member states should do what they preach. They should make their intentions in tax policy clear and public so that the borderline between what is acceptable and not is clear. They should assess and improve the quality of legislation. They should maybe report on the application and impact of their policies. And they should make the code of conduct on harmful tax competition more transparent and bolder, I believe, just for the sake of protecting tax competition, something we seem to all be standing for today. And maybe more importantly, I think member states should speak the same language and act consistently, whether they're in Brussels or at home. My last point is that we should ensure a level playing field. Well, first of all, a level playing field between tax jurisdictions. We must realize, I think, that there is no alternative to international cooperation. A world of multiple unilateral diverted profit taxes like the UK Google tax will lead to unhelpful levels of legal uncertainty and not only to double taxation, but worse, to multiple taxation. This will kill investment and jobs. In this respect, I think the OECD MEPs project should be supported. There is a lot of focus, and rightly so, I think, on uncooperative jurisdictions or tax havens, depending on how you want to name them. But more important, I believe, is that we should focus on harmful tax competition. What is sure is that we should not tolerate any obstacle to transparency, as well as any means facilitating crime and terrorism, a very big issue today. We should also ensure a level playing field between the different players. Tax should not only hit those who are captive and do the right thing, like very often employees. But the problem is that those who relocate activities without any other business reason than avoiding tax can only be caught if there is effective international cooperation. Similarly, a financial transaction tax or a carbon tax cannot really be operated at a local level only. When fraudsters do their risk and cost benefit assessment, because this is what they do, they should be left with no doubt that fraud is not worth it. Tax administration, I believe, should play their part too. Efforts to curb regulatory inflation, ensure the rule of law is applied, secure taxpayers' rights, and promote cooperation should be continued. In most instances, when taxpayers feel that they are treated in a fair and transparent way, they are less likely to engage in aggressive behaviors. There are many players advising on tax. Not all are qualified. Not all are regulated. Not all have the same ethical standards, and not all are transparent. However, I believe that all should be. To conclude, well, increasing transparency and regulation, even doubling tax inspection resources in the field of human resources and information technology, which is essential, will not make up for poor laws and the absence of profound behavioral change. On all sides, change will require strong political will and bold action. First and foremost, governments and lawmakers. They only can change the rules, no one else. But also business and their advisors, and I think we're prepared to that. At FEE, the Federation of European Accountants, we say that tax policy is a matter for society as a whole, because we all have a responsibility to solve a problem. Taxpayers, tax advisors, governments and their administrations, the European Parliament, I believe, despite the treaty that limits its competencies in that field, as well as tax professors and NGOs. Thank you.
Yeah, thank you very much, Mr. Butelli-Staft, for your 5 topics. I think we would all love to go into the details at once, but first of all, I would like to give the floor to our 3rd expert, that is Mr. Mainzer from the Tax Justice Network. Mr. Mainzer, the floor is yours.
Thank you very much, Mr. Theurer, and to the ALDE group. It's a great pleasure for me to be speaking here today. I will be the one who breaks the consensus around tax competition on this panel, I'm afraid, but let's see where we end up with this hypothesis. First, I would like to draw your attention to the top line of photographs on the slides. On the left-hand side, both are taken in 2012. Left-hand side, one taken in the UK, the right-hand one taken in Zambia, and these clearly show, I believe, that tax abuse by multinationals has become a truly global problem. By the way, I explicitly use the term tax abuse in order to encapsulate both tax avoidance and tax evasion, because I believe, especially in the corporate sector, it is very hard indeed to draw a clear dividing line between the two, and too often models and schemes that have been labeled legal by the tax advisors industry and be sold as legal, then later on at court have been found to be illegal, and 3-digit million penalties have been paid as a consequence. The bottom on the left shows Alain Deltour, the whistleblower who set in motion the LuxLeaks scandals, ex-PricewaterhouseCoopers, who is now being criminally prosecuted by Luxembourg, as all of you know. And at the bottom right hand, you see a photograph taken in Luxembourg last Monday in front of the Chambre des Députés, demonstration on the occasion of the visit of the TAXE committee. The demonstration was organized by the Global Alliance for Tax Justice, who demanded not to put journalists into prison and for more tax transparency and to know how much tax multinationals actually pay in each country. Thankfully, since 2012, the European Union has made significant progress towards exposing and addressing tax abuse. Most importantly, banks have to publish public country-by-country reports from this year onwards, and they will act as a powerful deterrent against tax abuse in the banking sector, among many other benefits. This success, by the way, is in no small part due to the ALDE group and especially to Sharon Bowles, who campaigned for having the effect of these regulations to start already in this year. LuxLeaks, however, has made it painfully clear that the tax wizardry that has been exposed there is not limited to the banking sector, but all economic sectors nowadays are implicated. And accordingly, we also need to expand the transparency requirements to the other economic sectors. There's a current proposal for a revision of the Shareholder Rights Directive that is going to be voted in the plenary of the European Parliament next week, where that exactly does that. It envisages to expand the country-by-country reports to all economic sectors. And once again, the ALDE group is going to play a critical role in this vote, and you, the Liberal members of European Parliament, are facing another historical opportunity to rebuild the accountability of the economy, governments and tax administrations, and to create a more level playing field in the European Union by voting yes to this directive. I would like to share some thoughts on the subtitle of the event today, which is suggesting that there is such a thing such as fair tax competition. Frankly speaking, and please forgive me for my bluntness there, I believe that this is nonsense. When states engage in tax competition, they are acting not in the interest of the market economy, but on behalf of rent seekers. They engage in what are effectively anti-competitive practices. By handing out tax subsidies, they distort and eclipse the competition between firms in the very same way as other subsidies impact on competition and ultimately on resource allocation as well. In a world where tax competition thrives, not those firms prevail in a marketplace which produce more efficiently and offer better and cheaper products, but instead those with the most shameless tax strategy and which have the dubious comparative advantage of locating in places where a nationalistic economic policy is corrupting the tax administration. Therefore, in our opinion, it's more appropriate to speak of a tax war instead of tax competition. In tax wars, there are no winners except powerful rent seekers. Real investors are looking for substance, not a competitive illusion and a set of legal make-believe tricks to shift artificial paper profits. Tax competition or tax wars are dangerous for the market economy and indeed for democracy as well. The beggar-thy-neighbor dirty nature of tax wars is best illustrated by the Luxembourg leaks and the tax rulings that have been disclosed. The political response so far to them has been to call for automatic information exchange on those rulings. For various reasons, I believe that this information exchange is an insufficient step to tackle this problem or to create a level playing field in the European Union. For instance, legal requirements to exchange information on tax rulings have existed for many years in the European Union, yet have been broken in the past, at least by Belgium and Luxembourg, and I believe by basically every single member state. Even today, member states such as Luxembourg continue to obstruct the investigations by the TAXE committee and emphasize their determination to politically protect new niches for their national financial industry. Therefore, I believe a broader and more public approach is necessary to ensure tax compliance and the level playing field. Public country-by-country reporting would reveal a breakdown of profits made and taxes paid, as well as the number of staff, turnover, and capital assets for each country in which a multinational has a subsidiary and operates. For the first time, it would provide data to allow the public and academics to objectively analyze the impact of any measures taken now and in the future. Without it, we will continue to guess much more than to know the size of the problem and if it is growing or if it is shrinking. And without this data, we will depend on fresh leaks to know and find out about. Looking at multinational tax abuse through the narrow window of tax rulings only therefore risks missing the bigger picture, and to overlook new tricks by looking at multinational companies in their entirety, country-by-country reporting avoids being easily tricked. The public availability of the data would act as a deterrent to corrupt practices in administrations and would incentivize tax compliance among companies. Furthermore, public country-by-country reporting would help to create a level playing field between large multinationals and small and medium enterprises. Currently, all those small and medium enterprises which are operating nationally only are already publishing this kind of data, and they are mandated and forced to do so. Multinationals instead are able to shift profits and business to secrecy jurisdictions, mostly on paper only, where they are under no obligation to report or disclose. In addition, the cost to implement country-by-country reporting would be negligible. According to a study by the British Tax Administration, HMRC, this is because any board member and tax director of a company is already processing this data. Furthermore, only a minority of large businesses is opposed to public country-by-country reporting these days. 59% of chief executive officers of large companies have favored mandatory public disclosure rules, country-by-country reporting style, according to a PwC study from the year 2014. Now, for those among you who say, well, all of this is going to be handled at the OECD level, they are taking charge of this problem, the BEPS program is in place, so we don't need to worry, they have country-by-country reporting in place. Let me make this very clear. The OECD is not going to solve this, and you are mistaken if you believe that the OECD will tackle this. They have already decided not to publish country-by-country data, and they are suggesting instead a very cumbersome exchange process which nobody knows yet if it will work in the next 3 to 5 years at all, and afterwards very dubious how it will be working. On top of that, BEPS is even prohibiting this data to be used for making tax adjustments in case of artificial tax base shifting. So if, let's say, Germany made a transfer pricing adjustment based on future OECD-style country-by-country reporting because of Luxembourg kind of tax rulings, Germany would be punished by being excluded from receiving the country-by-country reporting files in the future. Now, this is transparency OECD style. Therefore, the decision is now or never for the European Union and ALDE to once more take a lead and show the world that Europe is able to reform its corporate governance in reaction to massive malpractice. Thank you very much.
Thank you. Well, as you can see, we are the lucky ones with a panel which is not going to be sort of nice and neat. So the gloves are off. I think it would be fair to give them all a comment, just because we actually had very different approaches to the problem. And then after the first round, I'm going to take the public with us in the discussion. But I read part of Achim Doerfer's book during some flight to Greece, I think. And he actually begins, I think the first story in that book is about a Danish-made grill equipment, which actually reveals part of the business. So I give you the first round, and then we go with comments to each other. So please.
Yes, I'm very thankful that Marcus just tried to bring some controversy into the discussion and to show us all that it's not this easy. Once we break our principles down to the details, it becomes really complicated. But on the other hand, I have the feeling that we agree on the principles, that we agree on the ideals, that we would really like to have a level playing field, that we would really like to have a fair competition, that we would really like to have public scrutiny via publication of data, that we would really like to have politics explaining to the public what they're about to do, so everybody can understand the direction things are moving to, and the citizens do understand that we're moving away from cronyism, from favoring big corporations, to a broader understanding of taxation justice encompassing the single citizen. I guess that's something we could all agree on. And so I'm very thankful that you just put the finger in the wound and said, no, it's not that easy, but we should still keep going into that direction. And I don't know, just if you can agree on the following things, on the following measures that could and should be taken. Simplification, country by country reporting, transparent data open to public scrutiny, doing more things on the local level where there is this informal control by the local community, which is a very soft but effective approach. Harmonizing the terminology, harmonizing the principled approach in the different member countries, and really fighting for that harmonization. Exposing those countries who do not want to go down the same road, but who want to go in the different direction. We should not sugarcoat that, because the public should have the possibility to decide, okay, we don't like the policy of this or that small country. And plus, really communicating those things to the press, really communicating those things to the public, because for the first time in history, I don't think if there has ever been a period in history where the public has been this well informed. If you take a sample of the normal population and sit it down here, I would say that at least 20% could follow the discussion. And that's great. So we can really take, politics can really take people with them. The subject seems to be abstract, but people really have a grasp of what's going on, and we should use that.
Okay, thank you. Would you, Marcus, like to answer, or shall we go into order where we began?
If my co-speaker, yeah?
Okay, please.
So I believe I can share many of the things that you laid out there. I mean, there's then the question of detail when we speak about simplification again in opposition to fairness. There may be a trade-off between the two in many cases. So that is, I believe, in Germany at least, we badly need simplification of the tax code. This is abominable. What one has to read if one wants to try to understand the Income Tax Act. That's impossible for any ordinary average person, even studied and whatnot, with what background. But where I really disagree, I believe, is that when we speak about the further fueling the tax competition through giving more autonomy to the local level, I haven't seen yet any study that has shown or proven or convinced me that by increasing the competition between local entities or local state subdivisions, the effect will be a better use of resources. I mean, if this was true, we wouldn't be in the current mess of today, right? We have applied the same logic internationally for the past 30 years. We have we have dismantled the barriers to competition between states. We have argued, this would improve services and administrations and less corruption. I believe we see the opposite actually happening. We see that now the tax administrations are starved of resources so much, and they're under so much cutthroat competition, or they perceive to be under that they actually engage in what I believe is at best engagement in a gray area that I would label corrupt in many respects. So I'm not sure how that should work if you force countries or subdivisions, local subdivisions, to cut to have more autonomy in setting tax rates. If I understand this correctly, what you're suggesting, this means that there will be an increased sense, and this logic will further permeate the decision making of local governments, whereas I think the opposite is required. If we are complaining that the voters are no longer going to the ballot box, that the participation in election is waning, we shouldn't be surprised at that. For the last 30 years, most politicians have argued their tax reform policies because of there is no alternative, but we had to engage in a tax competition, what I think is a tax war. So why should I be voting if most politicians explain to me that they don't have a choice, but I can stay at home. They do all the same. So I believe we should not increase that power, the illusion that states are competing as firms are. And I think I'm with you there that we need to increase the competition among firms. And there is such a thing as fair competition between firms, but it's incompatible with the principle of competition between states and political divisions, setting the rules.
Okay, thank you. Well, if this would be a boxing match, then I think we had two guys in the yellow or red corner and one in the blue corner. So I think it would be fair to give the blue corner a chance to defend himself. Please, Olivia.
Well, thank you. It's especially a difficult position, I think, between these two, but I'll try to manage. And I was expecting, I think, a discussion on tax not to be too consensual. So forgive me if I'm going to provoke you a little bit more. But I do think that tax competition is important, actually. I don't think it came out of an ideological choice. I think it came from a fact. And the fact is that a number of tax bases have become more mobile, that technology has significantly changed, and that the world has globalized. That's a fact. So you can deny it or not. I think that's, one of the first facts. The second fact, I think, is that Europe, if you look at things from a more global perspective, is a very high tax jurisdiction on a global scale. We are on a continent where taxes are the highest. So that's also something that we do have to take into consideration if we're concerned with our competitiveness. Now, competition has to be fair. I think everybody agreed on that. And we have, like in business, where we have instruments to ensure that businesses are competing fairly, I think there are instruments also to ensure that countries are competing fairly on tax. These instruments is what we should be looking at. One is the Harmful Tax Practices Code of Conduct Group. That's one element of the puzzle. The other thing is state aid rules, I think. That's another element of the puzzles. But there are elements that contribute to ensuring fair competition. And that's what we should be looking at rather than complaining about competition or not competition. I very much liked, actually, the Swiss example where canton actually compete and people decide. And this is not a mechanism for competition. This is a mechanism for political responsibility. Because when people who are setting the budget go to the supermarket on Saturday and jump face to face with the guy who has been raising the taxes for the wrong reasons, well, I do believe that this exercises some sort of helpful pressure, I believe. Now, competition is also helpful, I think, because it will keep tax under scrutiny. I think that's a good thing. And tax is not something that we can endlessly raise. But on the other hand, I think what we're missing really is better clarity, better transparency on how the money is being spent. And that's the allusion that I made to having better accounting practices in the public sector and better public management. These two do go hand in hand.
Thank you. So far, no hands in the public. The easiest way to find out if you are moving in a tax haven or outside a tax haven is taking a car from Brussels. And as long as you have a rough road with a lot of potholes, you are in Belgium. And when you have a smooth road without potholes, you are in Luxembourg. But that's sort of the reality we are living in. I found out that last week driving down to Strasbourg. One theme, at least in Achim Doerfer's book, was, can we take care of the problem by having more people working in the tax authorities. But if we have a very, very unclear tax legislation, then it probably wouldn't help so much. So then you just have a lot of bureaucrats trying to do something but not coming very much further.
Right, in my understanding, it's not a question of quantity, but it's a question of quality. So when I hear from the tax authorities that they need more staff to go after the big fishes, then I always think, okay, does that mean that you are only prepared to go after the big fishes after you caught all the small fishes? Is that really tax justice? No, so it can't be about quantity, it has to be about quality. And maybe we should really think about how to increase that quality. And that might be unpopular in some ways. For example, we need maybe policies like hiring people from your sector and paying them accordingly, and really buying knowledge from the tax structuring industry, even if that means opening the payment structures in the public sector and having like special task forces, having think tanks inside the ministries, because there are two problems we can only tackle by higher quality. One, to go in a more efficient way after the big fishes, and two, follow the ever-changing shape of the taxation landscape. So there was this real paradigm change of the internet economy. It was a paradigm change in many, many fields, as well as in the field of taxation. So we don't have like a red brick building somewhere where we can say, okay, where there's the highest number of red bricks, there we will tax the whole thing. That doesn't work anymore. Nowadays, you can just build a car by doing research and development in one place, by having some parts assembled in another place, by having the management sit in the third place, and by having the legal seat in another place. And you can just freely design the whole taxation structure. So that's a big paradigm change, and we need people in the ministries, we need people in the government, we need people on the EU level who can just keep pace with those developments and who might even predict the future for 1 or 2 years, to not only react like 10 or 20 years after the fact.
Okay, please, yes.
Thank you. I would just like to comment on that. First of all, to say that I'm not representing an industry but a profession, and I'm very keen on that, because a profession has ethical rules.
He would like to survive, that's the reason.
And a profession has a commitment to the public interest, which I believe makes us quite different from an industry. Now, you're making, I think, a very interesting point, and I will again make a personal anecdote, actually, on simplification. And there are things that the firms actually are doing to help governments, many things, helping governments to simplify legislation. I have a personal experience of that, working on a unique VAT return and a unique place of taxation. The unfortunate reality is that this was more than 18 years ago, and nothing has changed. And governments are still discussing on the adoption of a unique VAT return. And people spend their time talking about the number of boxes that we're going to have on a standard VAT return in Europe. So if the 28 can't even agree on that, I mean, we in the profession have invested a lot of resources to design studies on how to simplify and implement how to leverage the power of information technologies to track fraud, to improve public management in tax administrations. And well, in the Council, there are discussions on the number of boxes on the standard tax return. So I think there is something that is not entirely working here.
Marcus, you would like to?
Yes, I would like to add here one point about the sequence of these steps, simplification and transparency. I heard, I think from you, Mr. Butetesaf, that you prefer simplification first and then transparency. I believe the order can only be the other way around. It is impossible for 15 years, as you have laid out. The CCCTB has been tried to be implemented without success, and no government will actually feel the appetite to engage in simplification that deserves the name by fundamental reform unless it has a clear and solid basis of data to simulate and anticipate the effects of the reform that they are going to undertake. We are currently lacking this data. We don't have robust tax standards, let alone accounting standards in Europe that would give us that data that we need. Tax administrations have also shied in the name of regulatory arbitrage, tax wars, away from demanding these kind of disclosures. And I believe without this public disclosure of the country-by-country level of activity of corporations and the taxes paid, we will not have an informed debate. We cannot have an informed debate around simplification.
Yeah, I would like to take the floor at that point, just to focus on something we have learned. There is a dilemma, and the dilemma is that a country which is attractive from the tax framework can, by shifting the base, the tax base, increase the revenue. So what we, and that is interesting to see. So some people tell us, yo, if you lower the tax rate, you would harm your own country, but that's not true, because there is a mass effect. And from that point, there is no joint understanding of the common interest, but there is a competition, an arbitrary regulatory arbitrage between the countries. So what would we have to have? We would have to have a common framework, a legal common framework, and we should have a joint audit. So if there are 28 tax administrators not doing a joint audit, what is the answer? So now with the OECD BEPS project, they try to establish a world ruling. If they cannot, do we have any alternative? Are there any other ideas? Because, okay, if you cannot change the framework, perhaps you have to adapt the system in each member state. Perhaps we can go into that question, because it's very difficult to overcome that dilemma as long as you don't have a kind of world government.
Well, maybe perhaps to respond to Mr. Mainzer first, it's not a matter of preference. I don't want to put simplification before transparency because it's my personal dream. I think it's just a matter of strategy. If we want transparency to work, well, we need transparency to produce information. Without simplification, what we're going to put out there is mere data that will not be comparable, that will be difficult to interpret, that will be confusing. I mean, we had the experience with country-by-country reporting in banks, where we had to ask the question to the EBA to get the European Banking Authority to get a proper interpretation of some of the items that were asked to be reported. I mean, it seems obvious, but when you get into the technical details, it gets extremely difficult and confusing. Therefore, if we don't have first simplification, I think transparency will be very difficult to work out. So it's not a matter of preference, I think. It's a matter of strategic path to make sure that what we do works out. I think that's the first point. On the CCCTB, I think the problem is lack of government will. It's not lack of simplification. The initial proposal from the European Commission was reasonably simple, probably too simple, I guess, because 15 years of discussions have contributed to making it more complex. Therefore, my remark that the discussion should be restarted and that we should maybe go a little bit backwards and re-simplify what has been made more complex. I think, Mr. Theurer, you're making a very, very good point on cross-border rulings. And that's where Europe can really make a difference, because there is currently an experiment for cross-border rulings in the area of VAT. And I see this as extremely promising. FE organized a roundtable discussion on that about 6 months ago now. And I think this is really an experiment that we should keep an eye on. And maybe once we have learned from the experience, I'm sure there is a lot that we can draw maybe in other fields like corporate tax. But, you know, it's not by random that the member states have, as you very rightly said, not used the possibility of exchanging rulings in the past. We still have a long way to go, I believe, to build trust amongst the tax administrations.
I would very much insist on that was an obligation and not a recommendation or a possibility to exchange those rulings. So I wonder how we can expect tax law and regulations to create material fair tax competition or fair tax justice, however you will call it, without the scrutiny by the public, whether anything is actually acted upon and followed up upon. And we will not know without the data of country-by-country reporting if anything that we are implementing now is working. So any simplification will be just become another playground for arbitrage and competitive activities by companies.
Still no signs of the public wanting to join, but as soon as you... Okay, there we have the first question there, 2 guys between, and then the third there, please.
Thank you very much. I wasn't aware that there was already the possibility for the floor or for the audience to react. Well, my name is Koen Rovers. I work for the Financial Transparency Coalition, and we are following this debate very closely and with a lot of interest. A quick point. Mr. Botti-Taft, you just mentioned a problem related to country-by-country reporting for the banking industry. It's, for the moment, one of the only sectors that has this public disclosure obligation. And actually, some banks started in advance. So last year, for instance, Barclays, the Barclays Bank, published a country-by-country report. And in there, it cited that it had about 1 billion of revenue in Luxembourg. This year, that number has gone down to 600 million. That is the first sort of comparison that we can draw with this public requirement for a large transnational corporation. To my mind, that is a really significant decrease of something that is likely to be aggressive profit shifting. And moreover, the bank has made public statements in order to say that it wants to be more accountable. I think something like this only comes about when there's public scrutiny, when transnational corporations feel that their customers care about something like this. With tax revenue, or with revenue services, it's a whole different game. Just this weekend, if we're talking about anecdotal examples, the Dutch government announced that it's going to streamline all its different information gathering systems within the revenue service. Apparently, within the revenue service, people were talking just in silos. They had no idea what one division was up to and what the other was. In such a system, I think it's really a free-for-all for large taxpayers, and therefore the public scrutiny is what I think will make the change. Thank you.
Okay, then were you into the business together, or?
No, I represent Eurodat. We're a network of civil society organizations across Europe working on how to finance development. And I took note of the discussion on Switzerland and got a bit worried when it seemed almost as if Switzerland was somehow a model to follow. So I'll just share a quick story about Switzerland, which I think is very illustrative. So I lived in Zambia for some time, and you may know there's a big mining sector there with close linkages to Switzerland through Glencore, which is the world's largest commodity trader. And there was actually a discussion in Switzerland in one of the cantons that hosted Glencore, whether or not they had some sort of responsibility, because an audit report emerged in Zambia showing huge profit shifting into Switzerland out of Zambia. And actually, in the end, nothing much came of this discussion in Switzerland. And I think that's very illustrative of the problem that we have, that the decisions we make, not only at a local level, but also at national level, have implications that go way beyond those boundaries. So even though we can have competition between cantons, or we can have competition between nation states, it does not mean that the people or the citizens who have accountability over those politicians that make those decisions are the only ones affected by the decisions. And I think that's a key point that we need to acknowledge, that we have spillover effects, massive spillover effects on other countries from the decisions we make here in Europe. And I think that's a further argument for why the public country-by-country reporting is so vital. Only by having that information can we see the spillover effects of our decisions, and we can have a sound debate on our tax systems and have meaningful international cooperations. So that was just a comment.
Thank you. And then the third intervention from the guy in the first row here, please.
Rudolf Rensheimer, German politicians interested in just in tax questions. I have some doubts whether one can go on a complete simplification. I think you have to take point by point which points you can simplify. But since if you simplify all, you can introduce a big injustice. For instance, if you have reduction for handicapped people, if you abolish this, then you punish handicapped people in favor of healthy people. This is not just. And so you have to go through point by point. Second, the comparison between countries. I think in Europe we need a harmonization, not equal taxes, but there should be some harmonizations, and the differences should not be too big, since if there are big differences, then are just models of tax evasion. Until now, each country has its own kitchen, how to make their taxes. There should be more coordination, or the system should be comparable to have transparency. If you have completely different system, that's very difficult to have transparency. And I think that one could go on with the proposition of the European Commission. And also, the countries must give up their complete sovereignty on taxes. There's a big resistance, but this should be done. You can, all in taxes, you can only do by a rule of unanimity. This should be abolished. You should perhaps have a majority decisions by a high majority, 80% or like this, but also you should abolish here the unanimity in tax questions.
Okay, then we are into real problems. I give up round to the panelists, and then we come back to the public. Okay?
Sorry, I just would like to clarify that there is no misunderstanding. When the TAXE Special Committee went to Switzerland, we addressed crucial and critical points, as you perhaps has read in media as well. So we did not accept that the Swiss tax model was attracting international companies by giving them special tax rulings. I just wanted to make that clear. And I learned from the tax competition in Switzerland that it is necessary to have a federal framework. And if you have a tax competition in the world, my question is, who is providing for that worldwide framework?
So, thank you for mentioning Zambia and giving us this extra perspective. I think that's a very important perspective. Just to tell you, one guy from the tax authorities in Germany gave a list to me where just split up by countries from this HSBC data of about 100,000 persons. And it was really shocking to me when I saw that there were like 20 persons from the Palestinian Authority area and some 7,000 from Brazil, and because there's a big difference if you have a number of 20 tax avoiders, tax evaders from the Gaza Strip, or if you have a number of 20 tax evaders from, like, say, Monaco. So, because it means a whole different thing to those countries, and it's based on completely different structures. Nonetheless, I think we should really differentiate, and we should not be content by saying, oh, this can only be solved on a global level. I don't think so. Clemens Fuest was mentioned, and he even wrote that there's a lot of things Germany, for example, could do unilaterally. Some things can be done right now on a national basis. It's a political question if we want to do that, but it could be done. And we now have the OECD acting. They had the G20 asked the OECD to do something, but now when we talk about the EU, we have to state that this is the most integrated international body of all of them, and it's a good chance to set best practices here and to initiate a paradigm change within the EU. And there's a lot of things that do not have necessarily be done on a global level, but could be done inside the EU just because we have some ideal circumstances here, like a low level of corruption, like a quite efficient tax authorities. It differs from country to country, but in general, it's not third world problems we have here in the EU, so we should set an example and do what we can, and should not kept doing that by some people saying, oh, it can only be solved on a global level. And that, in turn, might be some of the best ways to help developing countries. Way better to transfer that knowledge, to transfer that rule of law and a special field of law to developing countries than to just transfer money there.
Okay, it seems that you are both willing to continue, so yes.
Well, very quickly, because as much as I would like to keep this panel lively, I'm afraid I have to agree with much of what has been said so far. And don't get me wrong, I think I'm not trying to push back on country-by-country reporting. On the contrary, I think we should ask ourselves the question, how can we make it best work? And if we have the CCCTB, if we have a common consolidated tax base in the EU, building on your remark, we're the most integrated and the largest part of the OECD as well. So we can do it. And if we have a common consolidated tax base, the information that will be published in country-by-country reporting will be meaningful and comparable, and we'll get a lot more, I think, from transparency.
I believe that CCCTB will never be coming about without the public pressure by country reporting exerted upon politicians. We had the scenario countries could have agreed upon the CCCTB many years ago. It is not happening without the public putting a spotlight on the actual tax practices. The pressure and the suffering by politicians and politics is not big enough, I'm afraid, that actually country will find the solutions and the political will to agree upon something. The question about a standard setter has been asked. I want to add a few words about that. I believe the United Nations is the only appropriate international forum to deal with this issue, absent another specialist organization that may or may not come into place and into existence. The OECD has, since the Second World War, snatched the legitimate role of the creator of the tax rules from the League of Nations, and since then is acting as an illegitimate heir, and it is administering its tax rules and enforcing its tax rules actually upon the rest of the world. And I believe this is one of the two errors that I think we should not repeat, because once again, already in 1998, we have been in a similar place where we are today. We had a harmful tax competition project by the OECD The choice of forum then was the OECD, and I think it proved one of the key problems because so many tax havens are part of the OECD and have a majority and have had influence over the OECD processes at least after 2001-2. The second error has been to focus on the harmful part of tax competition. It was not acknowledged to say, as we are agreeing apparently on Switzerland, yes, tax competition among cantons may be a good thing, but we need a standard setter outside that is not competing, but that is actually setting the standard on ethical and on market economy grounds. Similarly, in the world economy, we need also standards and rules which are not subject themselves to competition, but which set a framework for competition. And these should be taken out of the market and not under the illusion that states shall and should and are reaping benefits from engaging in tax competition. We have the former head of COA and ex-US Treasury Secretary Paul O'Neill under George W. Bush. He said a few years ago, if I may quote, "As a businessman, I never made an investment decision based on the tax code. If you are giving money away, I will take it. If you want to give me inducement for something I'm going to do anyway, I will take it. But good business people do not do things because of inducements."
Yeah, now we are getting to the core discussion, and I think we should focus on that a little bit closer, because if there is a community who is not needing as much infrastructure as another, it might be able to impose lower tax rates on their citizens. So from that point of view, we really can agree that there are differences in tax rates, and we have also to realize that some very high tax rates were pushing people out of the country. So if we are now looking into the CCCTB discussion here, I'm looking forward to what the Commission will propose. I'm absolutely in favor that we get this common consolidated corporate tax base. And the great question will there be a minimum rate? I think there are good arguments in favor of a minimum rate, but there will be also very good arguments for a maximum rate, yeah, because there should be perhaps a common understanding how big should the tax burden be. But why I took the floor is a question to Mr. Mainzer. You are in favor of a country-by-country reporting, and I'm quite confident that in the European Parliament that will find a majority. Our jury team in ALDE is very much in favor. We discuss at the moment that the OECD proposal is a country-by-country reporting which is not included in the publication requirements. It's only a country-by-country reporting towards the tax administrations. And if I look at the discussion at the moment, I just would like to raise your awareness that at the moment some companies run the risk to be publicly accused. So that is a kind of modern inquisition. So if we look at citizen rights, and if we look on the equal treatment we should have in a state and rule of law, and that might be the problem with the United Nations. We have countries in the United Nations who do not comply with our standards of the rule of law for Western democracy. But if we look at that, I think at that stage, there are huge problems if some companies are taken into the public. It would be better to have working tax administrations. And from that point of view, I really think in favor of citizens' rights, it is a great scandal that the tax administrations of modern westernized democracies are not cooperating in the way they should do. And I think that is a point we as democratically elected members of your Parliament should take and make public, and we are criticizing that because we want to push our states, our member states, towards a solution for that.
Can I quickly respond to that? I think with the rule of law in developing countries or United Nations I want to a little bit challenge that assumption that the rule of law here is fine, whereas, of course, there's differences, but let me also remind you that in the United Kingdom, one single prosecution has followed from the HSBC leaks on around many thousand of UK hidden accounts, undeclared accounts in the UK. In Germany, we don't even have any data that is reliable on that. The small data that I collected for North Rhine-Westphalia indicates that it's even a worse balance in Germany. So India has taken to court and is opening proceedings against many of those that held HSBC accounts. So I think our preconceived, maybe prejudices in some cases are not actually as justified or real life apt anymore. So as regards the disclosure of these requirements, I believe without those, investors will not know what a company is about, and we need also investors to have that data. I want to know if I'm investing in a corporation, if this corporation will be on the front page next day because of they engaged in abusive transfer rulings or transfer pricing rulings in dubious malpractice in tax haven secrecy jurisdictions. So this is a question not for tax administrations only to look at that data. I think it will enhance the integrity of markets. A Pricewaterhouse study, because of the banking transparency, public country-by-country reporting requirements, an assessment by PricewaterhouseCoopers on behalf of the European Commission showed that they anticipated an increase of the competitiveness of European banks in response to those public reports. So I believe this is actually a leverage. I'm not saying it's the only blueprint. It will be the beginning. After we have that data available, we can then start a serious discussion about material tax justice, about material fairness, simplification. That will enable all those policymakers and decision makers to make informed decisions. Right now, we are in the muddy waters.
In muddy waters. That's for sure. The public? No? No? Okay, then Olivia, please, and then Achim.
Well, thank you. Just to add again that, at the Federation of European Accountants, we say that tax is a matter for society as a whole, and I do believe that we would not be sitting here without you guys banging the drums and doing, excellent work, I think, in this respect. Having said that, I think, if we want real change to take place, well, we have to start somewhere, and we have to build. And I think the OECD, despite the comments that you made, is a place where there is extensive expertise and knowledge and on which we can build. Without the OECD, we would not have had the Berlin Agreement, where 50 countries actually agreed to exchange information. It's not in the United Nations that this would have taken place. This took place in the OECD. Now, there are plenty of comments, I think, on cases that the prosecution is following after whatever leaks. Well, I happen to have been a public prosecutor once in my life, and I've always been absolutely mesmerized by the distance between what a file is when the file is on your desk and you have to apply the rule of law and make a decision as to whether you're going to sue or not. And what is being reported in the public on the basis of very, very limited information and lots of preconception. So I don't think we should prejudge how judges and prosecution are making their decisions. I think what we should do maybe is exercise political pressure so that the judiciary has a little bit more resources, is a little bit better equipped in terms of IT, but not start making confusion on what they're doing or not, or what they're not doing. They're basing their decisions on the law. And I think that's what we want to see applied.
Maybe I believe that there's another part to that story. I believe one of the reasons for the failure of tax administrations to prosecute or to challenge some of these proceedings actually is a result of revolving doors, and it's a result of what I think you, Achim, have mentioned before as a solution to bring in more of the private expertise. I think many of those firms have been at the forefront of much of the anti-money laundering compliance monitoring, at the forefront of many of those tax system analysis and review that are now found out to be ethically very, very tricky, but they are legal. And I think the reason why they are legal is because of that revolving door in the past years. So I think this is the symptom of a cut and of a reduction in the staffing of tax administrations, which will force them to source out all of these jobs to private actors, which then, of course, have a hard time in policing themselves. As we all know, self-regulation in the financial crisis, all of this, you know, we want to believe that human beings are good and they are doing the best thing whenever they are given freedom. I think a matter of fact, and also research shows that third-party reporting about, for instance, offshore accounts is the most important and most determining reason for tax compliance. If I am the only one reporting about an asset, I am very much in the temptation to lie. I need third-party reporting, and this is a no-brainer in tax research that this is a given fact. We need some sort of control to enforce a level playing field.
Yeah, coming back to this automatic information exchange, according to OECD rules, we have now a lot of countries that have accepted that starting 2016, starting 2017, and that makes me a bit suspicious. That all went too fast. That was easy. Take, for example, Singapore. Julius Baer is still moving its corporate headquarters from Switzerland to Singapore. The Deutsche Bank is still building a huge warehouse for 200 tons of gold in Singapore, while at the same time we hear that Singapore will comply to the OECD rules. So that's a bit disturbing. So why do they still make those investments in big structures to evade taxes, while there is completely clear that starting 2016 or 2017 there will be an automatic exchange of data? For me, the only conclusion to that is that this exchange of data is more kind of a symbolic policy, because it can very easily be circumvented. So it might be, from what I have read, the exchange of data is, it's a bank in Singapore and it's a German account holder. And as soon as you have a trustee who isn't a German citizen, the exchange of data is completely worthless. So that's one example for me where the EU should step in, close the loopholes, think really creatively how we can do this really make work, other than being just some symbolic policy, and really assess what kind of success this will be and how material and how valuable those informations are. We need some kind of assessment process for, like, starting 2016 for 5 years so we can really tell, has it changed something? Are there now like only 100 tons of gold in this Deutsche Bank warehouse instead of 200 tons? So I see the EU in the position of being able to move faster, to move more commonly, and to fill the gaps the OECD inevitably leaves.
Okay, we have the lady in the fourth row here, just for a change for the panel.
Thank you very much. My name is Catherine Ollier and I work for Oxfam, an international organization fighting poverty and inequality around the globe. I have a question for Mr. Boutellis-Taft. It's, you know, to build on the comment you made during the discussions about the fact that we in Europe are a continent where taxes are at the highest, and which may have an impact on our competitiveness. And on the document that was distributed at the beginning, which is a research on tax policy by the European Parliament, I read on page 14 that actually standard economic theory sees tax competition as detrimental to growth, and it may have a growth through its impact on inequality. Economists have concluded that on the whole, there's no evidence that higher tax rates in general are detrimental to growth. So I was just wondering, you know, when you say higher tax will have an impact on competitiveness, do you really think, as Marcus said, that it would prevent companies to invest in Europe, which is one of the largest internal markets in the world, because we do not offer them more tax incentive than we already do? And just maybe very quickly on country-by-country reporting, you said you're not against it, but does it mean, when you say we need more transparency, does it mean you want public country-by-country reporting, as we have for banks, or does it mean transparency OECD style, which means not public? So if you could clarify.
That was questions directly to Olivier, please.
Well, thank you for these questions. I think the point I'm trying to make is all about better regulation. And very often, this is what is missing when we're talking about tax. I mean, when you look at how often the tax code changes in many of the EU member states, it's just impossible to follow. And now we're seeing the extension of country-by-country reporting at the occasion of the Shareholders' Right Directive. While I personally believe it would be a much better approach to look at country-by-country reporting holistically, carry out a real impact assessment on the entirety of a project, and come to a conclusion on this matter. Now, regarding country-by-country reporting, whether it should be OECD style or EU style, well, it seems to me that we're clearly moving in the direction of public country-by-country reporting, and this is the reason why I was saying that if we're putting all this information in the public, it is critically important that this information is meaningful, that it is not only pieces of data that are being put out there that do not necessarily correspond to clear legal concepts. And that, again, is an issue of better regulation. When we asked the question to the European Banking Authority on what exactly they meant by turnover in a bank, it took them more than 6 months to respond, because it's a real question. So yes to country-by-country reporting, yes to public country-by-country reporting, as far as, for instance, we would have a CCCTB and the information that is being publicly reported is meaningful, not adding to the confusion. And I think there was a second part to the question which I answered to, I believe, in my initial remarks. I think all these things go hand in hand. And there is, again, from the OECD, I think, clear evidence that inequality is harming growth and competitiveness, and that there is a need to invest, for instance, in education. Well, how do we finance that? By tax. So let's make our tax system as efficient as we can.
Thank you. I think we have to try to finish with some remarks, because both Michael and I have to be in different rooms of the Parliament in 10 minutes. One thing has actually been partly answered, but always when the discussion in the European Parliament starts with, this is a very complicated matter, it's actually a signal to us politicians that don't bother, you won't be doing it anyway. So could we find some initial understanding of the steps necessary? So give us sort of 3 steps where we should be very adamant to be able to achieve them during this period, this mandate. Sort of. And if you are on the same, all of you are on the same line by those 3 approaches, then Michael and I can probably achieve something still doing our job out there. But please, try.
I would say 1, find out how to collect as many real data as possible. 2, find out if we can form a common terminology on terms like tax evasion, on terms like loopholes, on terms like circumventing the law. And 3, find out best practice examples on simplification of tax law in the single member states.
Well, I'm going to have 2 points in common, actually, so I will skip them. Redefining, I think, the terminology and the issues is essential, otherwise we don't know what we're talking about, I think. Benchmarking the member states on what they do at national level in terms of simplification, I think, is really something that we should consider doing. The CCCTB I mentioned is essential. I think it's a real important building block. And then transparency. And when I say transparency, it's not only country-by-country reporting, I think. I gave the example of the Code of Conduct group, I think. There is a need for more transparency as well on what the member states are doing. There is a need for the member states to explain their policies and to report on their policies. So it's not country by country reporting that will solve the whole transparency issue.
Markus.
Well, my points are pretty easy, I could say. Three times vote yes for the next public country-by-country reporting in the Shareholder Rights Directive in the week beginning 8th of June. I want to add to that it is enough if it was OECD style. We don't need to reinvent the wheel until this can happen. We have the OECD template for reporting. It's not ideal, I agree. We would like to have integrated financial reporting standards before that. We don't have it yet. It will be a medium to long-term travel until we have those. Therefore, my second recommendation would be also then to, after this has happened, and we have the OECD template published in the European Union mandatorily through the Shareholder Rights Directive, to ensure that the IFRS, the European Financial Reporting Standards, embody public country-by-country reporting, where then all this detail and more complicated fine-tuning of the tax base can happen and should happen. And finally, I would also argue for the public disclosure for all cross-border tax rulings. We see Belgium, we see the United States, they have published private tax rulings in the 1970s. It took a more than 15-year-long legal battle for tax analysts, an NGO by then, which was very small, but now it's, I think, among the world's most renowned tax information services, to sue the IRS to make those rulings public. I think we should now take the opportunity and require these tax rulings, all tax cross-border rulings, to make them public, and invest a lot of time into getting the definition right on this one.
So now we know in which direction to move. In the latest issue of American Economic Review, there is a very interesting discussion, actually starting, or the frame is actually Piketty's book. There is 3 articles of American economists about Piketty's book, and then the 4th by Piketty himself. And you can guess that tax issues are on the very top of those discussions. So we are not alone. Thank you.
Yeah, from my side, very quickly, as the co-rapporteur, I feel encouraged that we follow up on the topic. It was worthwhile to have this seminar. It is necessary to have that special report. We will focus on the implementation of BEPS and OECD template, but I have the feeling we have to think over the recommendations as well, especially if we focus on the solution on tax havens, because when we visited, for instance, Luxembourg, we learned that there is still the opportunity with 69 jurisdictions to cut down the withholding tax on dividends, and that is something which can be changed unilaterally. So I'm convinced that there are solutions if there is a political will, and thank you very much for the encouragement here.